Yeah. So first things first is we will be discussing about what went well. See, what went well is like we have made certain conclusions that building trust is the number one thing, because it is not actually a real estate business. Even though we are in the real estate business, it is actually not a real estate business. It is more of a people business or a relationship business. So the more the right relation we have, the better relation we maintain with the people, the trust is created. The trust actually relation will help to make it a transaction, right? So transactions is indirectly proportional to how fast or how we maintain the relation long term over them, so that the trust is created. Then the trust will leads to good relation leads to transaction. That's how the business is. It's more of a relationship business, people business or relationship business. We have to understand the people and psychology of it, and then help them what they need or get them what they want at is more easier than they getting themselves, right? Than they getting themselves. So it is more of like it is not actually like giving them what they need. Also, it is more of like a problem solving. What the problem they are facing, how we can give a solution to them. Typically, like a doctors, what pain are they facing, and then how can we solve the problem to an extent that it can be solved faster than they treating themselves, right? So they can rely on the professional expertise. That is what we need to establish. One. So this is the basic thing is, without trust, nothing moves in this business, basically, right? Second thing is how to actually get trust faster. So you know that building trust is takes time. It's not a easy thing, or it is not a just like that. It's not going to happen. It takes time.
Not like 1 month.
Yeah, exactly. So in order to do that, there are two things. One is two ways to build trust. One is build trust from scratch, or make a partner with the person who is already having trusted relationships with his existing clients, who can be our clients, and then create a creative way to venture together, so that he can win, we can win, the client can win. That is a better thing to do, and faster thing to do, so that it creates a leverage. Not starting from scratch, because starting from scratch takes time, as you know, right? That is a challenge. And we can't go ahead with the non-trusted people. It is highly impossible. We can't do and thrive in this business, basically. So this is the foundation. And what went well is, whatever we deal with the trusted people or the trusted relations, it happens like fast. If we don't deal with trustworthy people or trusted relationships, this business doesn't work. Definitely it doesn't work. It's like we are just doing like a hobby, not like a business. So that's what it will happen, right? And good thing is that we have made certain relationships with the regulatory authorities yesterday, and also we are looking and exploring with other revenue streams, because one thing is the biggest thing in this is, from now onwards we should be not be positioning as a real estate brokers. Basically, we should not be positioning as a real estate brokers. The highest way of positioning in real estate, actually in business, if you look at it in business, who will get the best experience or best treatment in business is investor. Investor will get a best treatment in business, because he controls the whole market, basically. So in real estate, again we have to position in the same way. Again in real estate also, the best way we can able to position our, the highest form of positioning is not as a brokers. The highest form of positioning is not also as a consultants, Consulting can be our side job, let's say, but our main job or our positioning is not. We'll tell them, hey, we are not a broker, we are consult, like that. We'll not tell. Uh, the positioning is, we are real estate investing company, or we are a real estate investors group, where we invest in commercial properties, residential, industrial, all those things. And instead of telling my client is looking for a property for doing this or whatever, we tell them one of our partner wants to start and he's looking at a location in this area. So the positioning is entirely different. We invest in commercial property, all those things. It is like our partner investor, right? He is our partner investor who invests in this property to start his business. We are helping them as an investor group, getting them, right? Like that. And it doesn't matter if owner gives or not, or if one side anyway it is covered. The business, one side of the amount coming, the service charge or the revenue is covered, definitely. We can charge our what is that, and now onwards we will not use the word commission, brokerage, those things. Instead of that, we call it as transactional facilitation fee or facilitation fee. Instead of commission or brokerage, facilitation fee
Uh,
is a good word. Double F, facilitation fee, or TFF,
because
transaction
because
facilitation.
the common person could not understand this kind of what you say that terms.
Yeah, we will explain in the, like, what it is and all about, so that we don't position ourselves as brokers at all. We kind of hate brokerage, and people hate brokerage. They create a negative effect in, if they hear the word brokerage, or if they are giving brokerage. So we will negate that word and then tell, we are, since we are a group of, we are into real estate investing, residential, commercial, and other aspects of the businesses. So one of our partner is looking to establish his firm here, to start a fashion store or whatever. So we have a lot of partners, investing partners. So they will be want to start like this here. He's also into business and he wants to start here. So in that positioning, it will be really good for us. Okay. So this is what we'll be uh, doing it as a transaction facilitating coordinators, or transaction facilitation fee is our this thing. We will explain in such a way that, let's say you're a client, we'll tell them, you are a business owner who wants to start in new location. Okay, that is the case. So you want to open a, what is that, you want to open a stationery shop, let's say. Okay, so I'll tell you, hey, we are into real estate investing. We are, like, you want, you're, if you're looking at a stationery shop to start, I heard that you're looking to start a stationery shop. So so I can recommend you certain locations and other things, so that you can able to start there. And the overall thing, we, by facilitating that, to get you the property there and the location, so we'll be charging, I mean, we will be, there is a commercial commitment, which is transaction facilitation fee, which is whatever it is, the fixed fee, or this much, whatever the price is, we can able to reveal them. So like that. Okay. So now we have seen how we can position differently. So we will create those scripts also, so that people looking for properties, we can send us new script, and we, people are giving the properties, they have properties for rent for owners, so the script is different. Okay.
Now,
So
yesterday one owner called me.
okay.
I told him that there is a one shop available for rent in Hebbal near Presidency College.
Okay. Okay.
So one guy has given the token advance and he didn't came back only. Now that owner called me yesterday that
Uh-huh.
my shop is vacant. You can bring your client.
Okay. Okay. So we will discuss
So
offline that, how we can do. Just make a note of it.
yeah.
Okay. So that thing we will discuss offline after this call.
Okay.
Okay. Yeah. So now we are going to talk about what exactly needs to have a good rental market. It might be residential, it might be commercial. So what is, these are the qualities or characteristics it should have in order to have a profitable rental market. It is a good healthy rental market if you want to call that. So what are the things we need to have? So those are the things, right? I'll share the screen. So can you able to share the screen, see the screen
No,
now?
no,
Not available? And
no. Ah, yes.
okay. Yeah. So first things first is, the first point is the overall neighborhood. See, neighborhood is all about a group of communities, right? So a group of
Yeah,
communities together staying in a single neighborhood becomes a neighborhood. A
yeah,
group of communities becomes a neighborhood. Uh,
yeah,
so in neighborhood, usually there are different types of tenants,
yeah,
right? There are different types of tenants. So you can see whether it is a mostly like if let's say it is near a university or a college, we know that students will be potential clients, right? It is a more of a student crowd will be there nearby.
yeah,
Again, it is if it's a college like that, student crowd will be there. If it's a school or something educational institution, more of family crowd will be there, because school going children, families will be there in the
yeah.
neighborhood. So we have to determine if is it a what kind of tenants are staying currently in that neighborhood. Okay,
Yeah.
let's say in Jainagar only. So if you think of Jainagar, what comes to your mind? What kind of tenants as a rental market? If you see, more of a family or more of a this thing,
More of the
students,
family.
more of
Family.
a family, right? So, but if you look at it near Dayanand Sagar University, okay,
Yeah,
if you look at it near Dayanand Sagar University, 2 kilometer
huh.
radius or 3 kilometer radius, don't you
Yeah,
see it is a more of a student crowd,
yes,
student as a tenants, because see university is higher education, so students can stay, come and stay
yes,
there. But if it's a school as an educational institution or a complete neighborhood, it's more of a family crowd, right?
yeah,
So, and one question. So, if near, let's say, university is there, if you
mm,
market it more of family
mm.
only tenants, would it work?
No,
Okay. So, in the same way, if it's a family neighborhood, if you are marketing it as a students only, would it work? No.
no.
So, in the family as a tenant market, so we can able to do two ways, either student or family. But as a university
Yes.
nearby, so we should only do market only as a student only, right?
Like we have here Christ University and Jain University also nearby.
Exactly, exactly.
Yeah.
So that is the, is that clear?
Yes, yes.
Okay, great. So first characteristic, you can either make a note of it or I'll share a video later. So first is the neighborhood.
Yeah.
We have to determine type of
Okay.
tenants. Type of tenants, either a student or a family tenant. Then we can able to accordingly we can market that neighborhood and we can tell, hey, is that neighborhood really worth doing the business or not?
Yeah.
We can't do all the neighborhood. Like definitely it's not possible. The second point is property taxes. So in very expensive areas, obviously the property taxes are high. So we need to look at it. Um, is it a really demanding location? And property taxes will the people tenants come here and all those stuff. See, property taxes in commercial real estate it happens more. In residential, it will be not so high because in commercial there is something called N triple N 3N, which means triple net lease. Triple net lease is like they insurance, maintenance, and taxes the tenants will pay in commercial. In residential, it's not like that. So looking at property taxes
Oh,
also, is it high, low, makes it is a good market or not. Again, so we have to see which
okay.
are in the tax, right? Property taxes. So which areas paying more, which areas is pay less usually. That is also one consideration as a total rental market. And the third point is schools. Obviously, we need to consider local schools also. Like, uh, is it really good for a monthly cash flow or it's going to be a selling market? So
Yeah.
because schools are there, monthly cash flow will be there. Tenants will be there. Families will come and then they can
Yeah.
send the children to the nearby schools. So schools also matter a lot. The third factor. Fourth factor will
Yeah.
be crime. So, what is actually crime rate? Is it low crime rate or is it declining? Is it going high or going low? Again, crime also depends. It's like this we need to get it at the local police stations. The crime statistics in that neighborhood. What is the crime rate all about?
Okay.
And job market. The fifth point will be job market. We also need to look at it. How is the job market overall in that neighborhood? Like how many jobs are there, and then job vacancies are more. People are taking jobs. So will it because see employment opportunities will attract more tenants because they want to no employee want to stay far away from the office or employment place, right? They want to stay nearby.
Yeah.
So job opportunities 100% attract more tenants. So job market
Yeah.
is the fifth point. How is the job market in that neighborhood? Depends. Is it a good
Okay.
rental market or bad as a factor? And sixth factor is amenities. Like what are the amenities? Like how about parks? How about restaurants, gyms, movie theaters, public transportation like bus, metro access, all those stuff. So these things also attract a lot of tenants. The amenities.
Yeah.
And seventh factor is like future development. How any future development happening in that area or nearby that area, so that people in the growth area, people wants to have build their homes or like they want to stay permanently, right? If it's a future development,
Mm.
so that is also becoming a lot of factor. Seventh factor. Eighth factor is
Okay.
number of listings and vacancies. See, number of listings is how many actually um, is it selling?
Yeah.
How many properties sell actually? Number of listings will happen, and number of
Yeah.
vacancies. Number of vacancies. So vacancies are good. Like it is a low rent. Let's say it is a upcoming market, and then rent is low. Again, it will attract a lot of tenants, right? It's a low rent, so I can still little far also, but rent is low. They can save money, right? So that's a good market again. And we can see the next factor will be the ninth factor, average rent. See, average rent is what is the average rent happening in that particular thing? Like, let's say it is 10,000 and way up to the range of the rent. That is also makes a lot of this thing. Again, it is coming on the average rent on a middle class. If it is higher middle class, again it goes high. Middle class average rent, we need to look at it. Ninth, ninth factor. 10th factor is like natural disasters, but we need to look at it in the local context. It is more of like the overall infrastructure, like roads and other things. Is it really good? Like last time, you know that like rain has created a lot of problem and a lot of roads have been damaged and other things. So looking at the rain and other natural this thing, the overall infrastructure, is it good, or like is it sustainable, all those things comes. So basically these are the 10 different factors we need to see in a rental market. So how does it sound as a total rental market research? Navshad, you're there? So this is about the rental market we wanted to discuss.